We're joined by Vimal Kejriwal, MD and CEO at KEC International. Thank you so much, Mr. Kejriwal, for joining in with us this afternoon on ET Now. And I'm going to start with that large order win of around 1,000 crores that you have, which is across your various businesses. What is the execution timeline, and by when will the incremental revenue actually start flowing in for the company?
So basically, if you look at this order now, it comprises of three parts. One is on the international order book, orders which are from Saudi. Then we have a large hospital order, which is the first order, and then there are cable orders. So what will happen is the Saudi and the hospital orders, the work will start immediately. But my sense is that the revenues will, if you look at the reasonable amount of revenue, they'll probably start coming in around the Q4 onwards or something. Q3 may a little bit revenues will come, but majorly it will start from Q4 onwards. And these orders are around 24 months. So a large chunk of the revenue would flow in the next financial year, starting from Q4.
Right. And so, I just want to understand, there are various contracts in this 1,000 crores, but what would be the blended margin be on these orders then?
So the blended margin in these projects is around 8 to 10%.
To 10%, but also talk to us about the margin recovery then. And are you seeing some margin recovery in Q2? What is it looking like currently?
So what we have been guiding is that on H1 will be around 6%. So Q1 was around 5.8. So I presume Q2 would be around slightly 6 or slightly above 6, so that we can, if we are able to maintain our guidance of 6%. And H2 we have said around 8%. So on an annual basis, we have said margins should be around 7%.
Also just talk to us about those collections in South Africa, Brazil. Has the South Africa business actually bottomed, and what do you expect it to become? When do you expect it to become profitable by?
So if you look at SAE, there is Brazil, there's Mexico, and the problem which were there were in Brazil, and Brazil had turned EBITDA positive from last quarter. So Q4 and Q1 both they have been EBITDA positive. As a entity, SAE has been PBT positive in Q1. Brazil is still not PBT positive, but it's marginally negative. So hopefully this quarter or so, they should also turn PBT positive. We had guided earlier that H2 they'll definitely be PBT positive, but I think hopefully this quarter itself they will be PBT positive. If not, the negative would be very, very marginal.
Also, just tell me about in terms of the collections from Afghanistan, how is that playing out and what is expected? And also, if you could talk to us about the balance sheet also. I'm going to merge two questions, and whether further reduction in the working capital days, what should we expect with regard to the debts, which was around 5,000 crores? Where can we expect that also?
So I personally do not see the debt number going down, okay, because we're talking about a 15% or so, growth in revenue. We're expecting the revenue to be 20,000 crore plus from the 17,000 and odd. So if you look at the absolute figures, I don't see the debt numbers going down. However, for interest as a percentage of revenue, we have been looking at, that going down, and net working capital, which was around 128 days, we have been guiding that we want to take it down to 110. Okay, right now it's slightly difficult, but I think we should be able to achieve that by the end of the financial year.
Okay, thank you so much, sir, for joining in with us this afternoon on ET Now, giving us an understanding in terms of overall the outlook for the company, as well as that order win, and how it's working out for the company.